over IRS Form 6765, credit for increasing research activities. So taxpayers, generally businesses, would use IRS Form 6765 for three reasons. One, to calculate and claim the credit for increasing research activities. Two, to elect a reduced credit under Section 280C of the Internal Revenue Code. Or three, to elect to claim a certain amount of this tax credit as a payroll tax credit against the employer portion of Social Security taxes. Partnerships and S corporations generally have to file this form in order to claim the tax credit. All other tax-paying entities do not need to complete or file this form if the only source of this credit is a credit passed through from a partnership, S corporation, estate, or trust. Those taxpayers should report directly on IRS Form 3800 General Business Credit. There are a couple of definitions that are important to note before we move too far into this form. So qualified research generally is any research for which expenses may be treated as a Section 174 expense in the Internal Revenue Code. This research must be undertaken for discovering information that is technological in nature, and the application of this research must be intended for use in a new or improved business component. Additionally, all of the activities of the research must be new elements of an experimentation relating to a new or improved function, performance, reliability, or quality. So the IRS form instructions contain explicit detail on what type of research activities qualify and which type do not. So surveys and studies, for example, research conducted outside of the United States or Puerto Rico or a U.S. possession, research in social sciences, arts, and humanities, research funded by another person or a government entity. All of those will be not considered qualified research expenses. We'll also get to a part of the form that discusses eligible small businesses. So this is for the purpose of offsetting AMT, alternative minimum tax. So an eligible small business is either a non-publicly traded corporation, a partnership, or a sole proprietorship whose average annual gross receipts for the preceding 3-year tax period cannot exceed $50 million. So that's an important distinction. We'll get to that at a later part of this form. And finally, there's a qualified small business for the purposes of the payroll tax credit. And that's a small business with gross receipts of less than $5 million and no gross receipts for any tax year before the 5-year period ending with the tax year. So that qualified small business for the purpose of payroll tax credit election allows that small business, to specify up to $250,000 of the research credit to be allocated towards payroll tax credit offset. So that's an option available. Now in this form there are 4 sections. Section A is the regular credit calculation, and Section B is an alternative simplified credit election. So if you choose Section B to calculate the alternative simplified credit, then you generally should remain with Section B unless you specifically choose to revoke that election. So what you won't do, you won't fill out section A and section B. You will do either one or the other. And if you've already chosen section B in a previous tax year, then you'll need to revoke that. Section C, you're going to carry the information from either section A or section B and use that to calculate the current year tax credit. And then in section D, you're going to complete this section only if you're a qualified small business that is electing to use part of the research credit as the payroll tax credit. So let's go through each step. We'll start through section A, and then we'll basically use the same information as if we were in section B. And we're going to keep very generic numbers. These numbers literally are coming off of the top of my head, so use your own numbers as you see fit. So in line 1, this is money that you've paid to an energy consortia, and there's a definition in the IRS instructions on what research consortiums are, specifically for energy research. And you can claim that in line 1, but any item that you include in line 1 cannot be anywhere else in the tax return. So, and vice versa. Anything you put in the tax return somewhere else cannot be included in line 1. So we're saying that we paid $10,000 to an energy consortia. In line 2, you will enter the amounts that the corporation has paid in cash under a written contract for basic research to a qualified university, scientific research organization, scientific tax-exempt organization, or grant organization. And then there is a base amount, a qualified organization base amount, based on minimum basic research amounts, plus maintenance of efforts for the preceding three preceding tax years. So in line 4, we're going to subtract line 3 from line 2, and we'll get $5,000. In line 5, we're going to enter the wages for qualified services. This does not include wages that you may have used in calculating the work opportunity credit. You can only, again, for general purposes, if you use an expense in one tax credit or for one deduction, you usually can't double dip or claim that somewhere else. So we're simply going to write $10,000. Again, this is a random number. Cost of supplies, $10,000. Rental or lease costs of computers. So to the best of my knowledge, this would indicate something like mainframe access. If you're a company that's leasing computers for qualified research, the computer in question cannot be on the premises of your company, and your company cannot be the primary user or the operator of the computer. So literally, if you imagine a company that needs to lease time on a mainframe computer or for highly complex modeling, things of that nature, then you would put those applicable costs here. In line 8, you're going to enter the applicable percentage of contract research expenses. So in the form instructions, there's guidelines on, so if you spent $10,000 on certain research, you would have to look in the form instructions to see what percentage, ranging from 65 to 100% of the actual cost you could include. So you can include up to 100% of any amounts that you paid for qualified energy research performed by an eligible small business, university, or a federal laboratory. You can also include payments to those entities to the extent that they are included as basic research payments up here on line 2, not to exceed the base period amount in line 3. Okay? So 75% of amounts for qualified research by a qualified research consortium. And that also includes 75% of the payments that were included as basic research, not to exceed the base period. And finally, you can claim up to 65% of amounts that you paid for all other qualified research by any other person. So let's just say that we do all of that calculation offline and we come up to $10,000. In line 9, we'll enter total qualified research expenses, which simply means that we're going to add lines 5 through 8, and we've got $40,000. In line 10, you will need to refer to the form instructions to determine what your fixed base percentage is. First of all, it depends on whether your company exists technically as a startup company or as an existing company. And according to the IRS, a startup company is a taxpayer that had gross receipts and qualified research expenses either for the first time in a tax year beginning after 1983 or for fewer than 3 tax years beginning after 1983 and before 1989. So if you started a company in 1985, according to the IRS, it still can be considered a startup company. So the calculation for a fixed base percentage for a startup company, it ranges from 3% on up, and the form instructions contain precise calculations based on whether you're in your first 5 tax years, 6th, 7th, 8th, all the way up to 10th tax year or 11th and subsequent tax years. And there's a slightly different modification to the calculation depending on that. The fixed base for an existing company, which is defined as any company not a startup company, is calculated by dividing the aggregate qualified research expenses for tax years beginning after 1983 and before 1989 by the aggregate gross receipts for those tax years. So again, and this number cannot exceed 16%. So if you're spending 25% of your revenue on research and development, you can only claim up to 16%. So let's just say that this is a flat 10% number. In line 11, we're going to enter the average annual gross receipts for the 4 tax years before this current tax year. You might be required to annualize them for any short tax years, and if there's anything particular about your tax year, then you need to refer to the form instructions. But let's just say that this comes out to a nice $1 million in average annual receipts. In line 12, you're going to multiply line 11 by the percentage on line 10. So 10% of $1 million is $100,000. You're going to subtract the $100,000 from the $40,000. This gives us 0. But for the purpose of completing this form, let's just go back and pretend that line 9 is actually $400,000. And then we're subtracting $100,000 from it, and that gives us $300,000. Now multiply the line 9 number by 50%, and we get $200,000. That's the number that goes into line 14. And in line 15, we have to pick the smaller of either line 13 or line 14, which happens to be $200,000. In line 16, we're going to add line 1, line 4, and line 15, and we'll get a cool $216,000. Now, if you choose to elect the reduced credit, then you must complete the rest of this form, even if you did not claim research credits on the original return. If you don't choose to elect the reduced credit, then you must do a couple of things. One, reduce your otherwise allowable deduction for research by the amount of credit. So you can't take a deduction and a tax credit for the same expenses. If the credit exceeds the amount that was allowed as a deduction, then you need to reduce the amount chargeable to your capital account for the year for such expenses. So you can't charge it off, and if your credit exceeds your deduction, then you've got to back that out in your books. If you elect to claim a portion of your research credit as a payroll tax credit, then that amount is treated as a research credit for the purposes of this reduced credit. So we'll just answer no, and then we'll multiply the line 60 number by 20%. If you said yes, you would have to multiply it by 15.8%. For people who select no, you also have to refer to the form instructions for a statement that must be attached. And this statement needs to list the deduction amounts or the capitalized expenses that you reduced. Also, you need to identify the lines in your tax return, schedule, or forms for those capitalized items so that the IRS can understand where you made those reductions. Okay, so we're not going to do that, but we will just go through and just pretend that we had. So there we go. I believe that's 216,000 multiplied by 20%. So that would be the amount of tax credit calculated under the regular credit. Now we're going to use similar numbers wherever it says see the line blank instructions. We're just going to put the same information. So line 18 will contain our $10,000. Line 19 will contain $10,000. Line 20 will contain the $5,000 from line 3. We'll do the same thing here where we subtract line 20 from line 19, and then we'll add lines 18 and 21. And then we'll multiply line 22 by 20%. So now we're going to enter wages for qualified services, the cost of supplies, and the rental lease of computers in the same proportion that we entered them up here. So in line 27, you'll need to see the line 8 instructions for the applicable percentage of contract research expenses. So in line 8, we had $10,000. We're going to put $10,000 here. We're going to add lines 24 through 27 and come up with our $40,000 of total qualified research expenses. So far, we're basically tracking the same way that we had here. Okay. Now, for the purpose of this, when we went through the rest of the calculations without that adjustment to $400,000, we ended up zeroing out this tax credit. So I'm going to add that additional zero down here as well. so that we don't zero out this tax credit. Now on line 29, you're going to enter your total qualified research expenses for the prior 3 tax years. So if you did not have any qualified research expenses in any one of those years, you can skip lines 30 and 31, go straight to line 32. Okay, so what did we put? So for the prior 3 tax years, we didn't have to actually do that. So we're just going to put down that we spent $10,000, well, $100,000 in the prior 3 tax years on average. In line 30, we're going to divide this line 29 number by 6. So let's make this an easier number to do that with. 120,000 on average. Just dividing that by 6 gives us 20,000. Now, subtracting line 31, or sorry, line 30 from line 28. So we got 20,000 and 400,000. So we're going to end out with $380,000, for which you're going to multiply line 31 by 14%. And that gives us 53,200. Okay, so if you skip lines 30 and 31 because there was a year where you did not have qualified research expenses, then you would simply multiply line 28 by 6%, and that number would instead be 24,000. Okay, so now we're going to add line 23 and 32, and that line becomes 56,200, slightly more under the alternative simplified credit. Now, the nuances might be different based on different taxpayer situations. So as you go through this form, you should probably determine which one is appropriate for you and stick with it. But if you decide to elect the reduced credit under Section 280C, then you either select yes and you multiply line 33, that amount, by 79%, or if you elect no, then you would enter the amount from line 33 and then follow the same instructions as outlined up here for the statement that must be attached. So you can claim that whole credit if you don't want to, and then you would have to attach the statement. And there's a note for members of controlled groups or businesses under common control. There's instructions in the form instructions for the statement that you must attach to that for the IRS to recognize it. So in Section C and Section D, we're going to go through and calculate the actual tax credit for the current year, and then if for qualified small businesses, like how much of that gets processed as a payroll tax election. So in line 35, you're going to enter the amount of the credit from IRS form 8932, which is the credit for employer differential wage payments. That is also attributable to wages used to calculate the credit in this form. So again, if you're taking a tax credit on a different form, the IRS will make you back out that part of the credit so that you're not double dipping. In this case, if you're taking a tax credit for employer differential wage payments, then you cannot also take that on the wages that you paid for research and development. So we're just going to use $10,000. Now you'll subtract the line 35 number from whichever applies from line 17 or line 34. I feel like using line 17, so that's what we're going to use. We're just going to use 43,200. And that gives us 33,200. Now, line 37 is for credits that might have been passed through from partnerships, S corporations, estates, or trusts. So as you dig into the form instructions for each of those, they're going to show up on your K1. And for estates and trusts, they must allocate that tax credit in proportion to the amount of income that was allocated to each beneficiary. And then, so for partnerships and S corporations, those are going to be from Schedule K1. In a partnership, it would be in box 15 with a code M. For S corporations, it'll be in box 13 of K1, code M. And for trusts and estates on IRS Form 1041, it'll be on Schedule K1, box 13, code I. So we're just going to put this in and call it $10,000. That was passed through on various K1s. The source doesn't particularly matter. And it is important to note that all taxpayers that are figuring a separate credit need to complete IRS Form 6765. So if you completed Section A or Section B up here, then you would need to keep going through. However, if you didn't calculate a separate credit and the only reason you're putting anything on this form is to report this pass-through on your K1, then you don't need to complete Form 6765. You can simply take this number from your K1 and put it in an IRS Form 3800, report it as a general business credit. Now, eligible small businesses will report the credit on line 4I. All other taxpayers reported on line 1C. So look through the form instructions to make sure you understand where you're putting this credit. But if that's the only reason you're claiming this credit on this form, you can just claim it directly on Form 3800. Now in line 38, we're going to add lines 36 and 37. So, this assumes that we are not going to just claim this directly on Form 3800. We're just going to keep going. So now, estates and trusts, go to line 39. Partnerships and S corporations that are not electing the payroll tax credit can stop here, put this on Schedule K. If partnerships and S corporations are electing the payroll tax credit, then we will go to Section D. Eligible small businesses can stop here and report this credit on line 4I. And then any other taxpayer will file this under line 1C. So now estates and trusts need to reduce their amount of credit by the amount of credit that they have to pass on to their beneficiaries. So, and this has to be done in proportion, the same proportion as income was allocated. And this is also subject to any passive activity credit limitations. So if this is applicable, be sure to read the form instructions. I'm going to fill this in as if this was $10,000. And so for estates and trusts, you'll simply back that out. And now you've got this that you can report on either Form 3800 part line 4I or part 3 line 1C. Now, really quickly, we'll go through the last part, which only applies to qualified small business payroll tax election and payroll tax credit. So the form instructions contain specific information on what a qualified small business is for the purpose of payroll tax credit election. And that is gross receipts of less than $5 million for the tax year, and no gross receipts for any tax year before the 5-year period, ending with this tax period. So if you go back, if this company has been in existence for more than 5 years, or if they have gross receipts of more than $5 million, then they cannot make this election. I'll just say that Acme Enterprises is, and then you're going to enter the portion of line 36 that you decided to elect as a payroll tax credit. So let's just imagine that we take $10,000 and we're going to make that a payroll tax credit. Now, line 43 is the general business carry forward from the current year, and there is a general business carry forward worksheet in the IRS form instructions, which requires you to go through IRS form 3800, pull out certain data entries, and then run some calculations. And partnerships and S corporations don't need to do this. They don't generally have business credit carry forwards. But we're going to just say that we had $10,000 in a credit carry forward. Now, we're going to go to line 44, and we're going to, if you're a partnership or an S corporation, you'll enter the smaller of either line 36 or line 42, which in this case is $10,000. All other taxpayers will enter the smallest of line 36, line 42, or line 43. Now you'll enter this on here, but then also on IRS form 8974, which is your qualified small business payroll tax credit for increasing research activities. You'll enter that in part 1, column E, and there you go. So that's all we have for this form. We've written an extensive step-by-step guide, which you can find on the website. Simply go to teachmepersonalfinance.com, type in IRS form 6765, and you should see our article. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or concerns, please reach out. Have a great day. Thank you.